All right, we're back with another investment FAQ. So, one of the questions that we get the most on Boteco Talks is why invest on the S&P 500? And Fede, honestly, that's always what you tell me as well. I wanted to pick your brain a little bit more around why should we think S&P 500 first?
That's a great question, Mire. I'll give you two reasons that summarize why I think you should always look to invest in the S&P 500. Number one, philosophically, I believe, and I think statistically it's proven, that it is really difficult to outperform the market. What that means is that if you dedicate time to picking stocks that you find interesting or that you like or that you think are attractively priced or whatever the case may be, odds are that over the long term, you're going to underperform the market. By the market, I mean, call it the S&P 500 index, which is considered the proxy for the US stock market. Okay. So
Correct.
philosophically, I just think you can't do better. You can't beat the market. People dedicate their lives to trying to analyze stocks and beat the market, and most people fail. So that's number one. Number two, investing in passive indexes, which the S&P 500 is an index, right? You invest in a passive index through ETFs that we've discussed before. ETF is an investment vehicle that gives you access to whatever, including indices like the S&P 500. For example, SPY, which is a ETF that tracks the S&P 500. There's also other ones like VOO that track the S&P 500. They're extremely cheap, meaning that the asset manager that creates this ETF charges really low, what they call management fees. And it just makes it a really efficient way to get exposure to the stock market.
And when we talk about the managers, are we talking about like a Charles Schwab?
So what I mean by a manager is ETFs are usually created by asset managers, call it a BlackRock or a Fidelity, for example. So they'll create these vehicles in which you invest in the public markets and they'll manage it for you.
Do they get paid?
Like Vanguard is another one, for example.
Do they get paid to create these vehicles every time you invest?
Correct. So they'll charge a management fee. And that is embedded in the performance of the vehicle. So if the ETF, for example, is very common, like SPY is, I believe, the largest ETF in the world, for sure in the US, they'll charge basis points. So remember 0.0123%. I don't know what's the exact management fee on this ETF, but it's extremely cheap because it's extremely liquid. And it just makes it accessible to everyone. So you don't see it because it's not like they deduct actual dollars from your account, but the performance of your ETF won't be exactly like the index. It'll track it almost to the T, but it will be slightly less because there is some, call it slippage, or there is some cost embedded in it. But it's what is available to public investors and retail investors like you and I.
Gotcha. So, okay, why SPY and not other ETFs?
So there are other ETFs that track the S&P 500. SPY is the most commonly used one and has the most assets under management. So whenever I try to make it as easy as possible for you and for audience, and it's one of the things that when I say SPY, the odds are that people know what it is. When I say VOO, it's not as common. It does the exact same thing. In fact, I think it's a little bit cheaper. But I want to solve for simplicity, and SPY is good enough, cheap enough, and it fulfills its purpose to where I feel comfortable suggesting it.
Gotcha. And last question is just around like S&P 500 in general. So my understanding is that S&P 500 tracks the performance of the top 500 companies in the US.
Correct. By market.
Is there any other index that you think is also super relevant? If you, let's say, like in my case, I have, let's say, $5,000 I want to invest. I know I would probably maybe invest all of it in the S&P 500, but is there other indexes you recommend?
For sure. So I think the indices or the ETFs that track certain indices that I would recommend it depends on the person's asset allocation and risk profile, right? So you might want to have some broad market exposure, which is the S&P 500, because it represents the 500 largest stocks in the US and the broader US stock market. But then maybe you want to invest in specific areas. Like there are indices that will track the top 50 companies of Europe, for example. And there are indices that will track the stock market of Japan, of emerging markets, whatever the case may be. ETFs track these indices and you can invest in those. Which ones I would recommend? It would depend on the asset allocation. Are we good?
Yes. Thank you.
All right. Bora. Ciao, ciao.
Bora.